The first half of 2021 was not without its difficult points, but overall this has been a largely positive time for investors. Concerns over the recent increases in inflation plagued both equity and bond markets in February and March, but since then we have seen sustained positive returns and lower than usual levels of volatility. The cautious tones being used by the major central banks are comforting to investors who are wary of higher interest rates and the prospects of potentially slower growth and a devaluing of fixed income assets. If inflation is sustained at a higher rate, interest rate increases become more likely. We are conscious of the risks, but believe we are well positioned to deal with the change in the economic environment. After the negative reactions in stock and bond markets in the first quarter, the second was a quieter period which brought a more moderate positive return. Market volatility is low in relative terms, which has been helped by minimal interest rates and economic data which has been strong enough to reassure investors that a recovery is on track. Asia was a particular highlight of the quarter, with India managing to substantially reduce their COVID infection rate and increase the pace of vaccinations. Reports from companies and countries show that for many the world is returning to pre-COVID normality and some of the pent-up cash is being spent. However, we know that challenges still await and we are not out of the woods just yet. We continue to select funds for our portfolios with an optimistic mindset, and we hold a moderately increased equity position to try and make the most of the recovering world. Bond markets are more difficult than they have been for some time, especially with the prospect of rising interest rates on the distant horizon. We have been diversifying in this space and in decreasing our sensitivity to the most vulnerable areas. The keys to maintaining positive market sentiment will be consistently rising economic growth and inflation that does not increase too far or too fast. We need to see central banks continue their current policy of maintaining a business-friendly environment. A huge amount of opportunity remains, and we are excited about the prospects for many of our higher growth themes in portfolios, including smaller companies, healthcare, and clean and alternative energy.